Bitcoin is in trouble. Actually, many of the cryptocurrencies currently traded on the exchanges are in a little bit of trouble, I would say. The Fed in October put out a statement saying that, well, it said a couple things. One, it was going to take its hand off of banks as far as discouraging cryptocurrency activities. So they're kind of removing their discouragement from banks, stifling what they're going to allow banks to do. The other thing they told us, actually, they told us two other little interesting pieces of information. One was that digital assets are no longer considered fringe, uh, on the fringes of payment processing. So what they're saying is that they are recognizing that cryptocurrencies and digital assets are not going anywhere. It's kind of an acceptance, along with the statement that stablecoins could present opportunities and need more regulation. So this is very interesting that the Federal Reserve kind of name dropped stablecoins. This is back in October of this year, 2025. And if you don't know what a stablecoin is, I didn't either. I had to go back and look at it, but we'll get back to that in a minute. First, a quick history on Bitcoin and its price movements. If you take a look at this graph, you can see that Bitcoin from its inception, started kind of unknown, and it had a breakout, kind of a public breakout in 2018, when it kind of went public, and it went surged from maybe 1,000 to maybe 20,000. Maybe on average, I would say between 10 and 15,000. When a lot of public money was being invested into the currency. So you see that little spike around that time frame. Then you fast forward to about 2021, and you see a big jump there. That was when Bitcoin made its way into institutions. PayPal started buying and selling. You had a lot of large companies invest, Tesla, Square, and some others. And banks started to look at the cryptocurrency as a viable investment. So you see a large injection of cash there around the 2021, I would say. And then a little drop back down. And then in 2024, we see another surge of cash that got injected. That's because Bitcoin ETFs were approved and they started to become part of traditional portfolios. Banks like Fidelity, Schwab, BlackRock started to integrate cryptocurrency. So you see another injection of cash. The thing about Bitcoin is its price is very dependent on supply and demand. It's very volatile, as you can see. So, and the federal government has been studying cryptocurrencies and specifically Bitcoin, and I'm sure all of them, since who knows when. They started, they've been at it for, at least the past 5 or 10 years. And finally, they started to roll out some guidance in the form of little bits of information, little comments. So, why? Why is the government even going in this direction? Well, cryptocurrency it's first of all, it's a currency. It's called cryptocurrency. It's not a security. It's not a debt instrument. It's a currency, and it has some advantages over traditional currencies in the form of how it's processed. Um, so some of the things it brings to the table is speed. Transactions happen very fast, almost instantaneously. It's also 24/7. You can move money right now if you wanted to. You don't have to wait for a bank to be open to move money. And you can move money across borders immediately. So it has a speed advantage. It's always open. It's much cheaper. So the average cost of a transaction through um, Bitcoin is about 60 cents. and traditional dollars are 1 to 3%. Anybody who has a business is very familiar with transaction fees. Whatever your point of sale system is, Square, whatever it is, you're used to paying, 1.5%, 2%, 3%. So there is a possible win right there for businesses if cryptocurrencies ever become mainstream. Um, there's some other supposed benefits like privacy and security, but we've seen all these hacking attempts and successes where they've stolen billions out of exchanges. So the security is pretty iffy still. Privacy, not so much. The U.S. government and authorities can definitely see what you're doing, what anyone's doing, buying and selling, who they are, along with the exchanges and any kind of apps that are used. They all have full visibility. So privacy is not really, and I don't know why you'd want that anyway, unless you're doing something on the shady side. So that being said, we can look now at what the government is starting to get behind, which is called these stablecoins. And I had never heard of that. So I had to look up the term, and a stablecoin is exactly what it sounds like. It's a crypto asset that is the opposite of volatile. It's very stable. And the reason why it's stable is because it's backed by some type of real world asset. If you look at the top five, they're backed by either the US dollar or by gold. So these are essentially not quite out indirectly backed by the US government. I wouldn't say directly, I'd say indirectly because they peg to the US dollar. And when you look at these stable coins, the first thing you notice is they are not volatile. They stay the US dollar ones stay at about $1, which is exactly what you'd want to see. And the gold ones are pegged to gold. So as gold rises and falls, so will the value of that cryptocurrency. So this is a good thing. This is not a bad thing. As the Fed gets behind these and kind of tries to normalize cryptocurrency, small businesses can start to think about adopting cryptocurrency as a form of payment. And that should be super exciting because what business wouldn't want to take off at least 1.5% off of their bottom line? That'd be, that's a pay raise for everybody. But you can't do that unless you have a very stable cryptocurrency. You want to take advantage of the speed. You want to take advantage of the transactions savings, and you want to take it. You want to take advantage of the things that cryptocurrency brings: instantaneous payments and being able to send money cross border with less friction. Those are all huge pros, but the business community can't take advantage of that right now because, well, I guess they could in the form of the stable coins. But when it comes specifically to Bitcoin, you can't really, as a business owner, you wouldn't want to introduce that type of risk because if you start accepting payments for, let's say, a car dealership and you take $50,000 payment in Bitcoin for, I don't know, some new vehicle, and before you have a chance to transfer that money into currency, the bottom drops out of Bitcoin, which it's been doing recently, and you could lose 5-10% of that money in seconds. And that risk doesn't make sense for business owners. So from a business perspective, stablecoin is great. It brings the benefits of cryptocurrency to the business owner and anyone using them without the crazy fluctuation and speculation of one of these other coins that are not pegged to real world assets. So this should be an easy win for business owners and something to look forward to. Thank you for watching. If you like this content, please consider subscribing. Have a good day.